So in this chapter we will cover the following items. Uh, First item that we will discuss is about the cost concepts for decision making. So far we had a long discussion and many uh, exercises regarding the cost concepts and how the cost management can affect the company, why cost management is important in the companies, and today we will discuss about the cost concepts for decision making. Uh, to start with this, of course, we need to discuss the decision making itself and the differential analysis approach in the companies. The second part is including the types of differential analysis, which we have three main items in this part. The first one is special orders, second one the make or buy decision, and the last one repair, retain, or replace equipment. So in this part, we will in fact check what should be the decision by the company in terms of any of these items. Either they go for the special orders or not, either they should make or buy, and finally, uh, if they need to repair, retain, or replace the equipment, how they should make a decision. So these are the all items that we will cover in this chapter. So before we start, in fact, we need to uh, get to know more about the decision making process in the company. If you remember when we were discussing the main functions for the management in the first chapter when we started with this course, one of them was decision making. So decision making in fact is a very important function in the management, and managers uh, have to be able to make decisions in terms of different issues and different problems, different challenges that they may have and they may face in the company. For example, they need to make decision what products to sell. So there are different products, and if you remember, in terms of even mixed sale, we had different products in some companies that they have to make their decisions how many percentage should be allocated for each product. So this can be one of the decisions that manager should take regarding how many and which product should be sold. Or they have to make decision whether to make or buy component parts. So in some industries, in fact, the companies they get their material, their main components for finalizing the product from outsourced supplier. They don't produce every small part or component of the uh, final product. So sometimes it's more beneficial for them to just buy it from other companies. Therefore, the manager needs to decide whether make or buy the component parts, or they have to decide what price to charge. This is a very challenging decision because it affects the company in different ways. The uh, whole benefits and the net income that the company will receive is of course based on the pricing strategy, and the company should be very careful about the prices. If they go for very high price, they will lose their customers. If they go for very low price, of course they will not get enough profit out of the product. Therefore, it's very important to make a right decision what prices to charge for the product. Another question or another decision that the manager should make is channels of distribution to use. So, for example, they might have only online channels for their distribution, or different distribution for their product. So this is another decision that the manager should make, and whether to accept special orders at special prices. This is again another question or another decision that the manager should make, and we will discuss in details during this lecture. But what is linking this decision making with the chapter is in fact the key to making such comparisons is differential analysis, that we will do it during the chapter and in this lecture. So, decision making process, in fact, when you want to make the decision, we need to follow a specific procedure. So when it comes to a business, in making a decision for the business, we need to consider both financial and non-financial information. This is very important. Uh, so you are not only thinking about the net income or the amount of the profit, of course, you are supposed to uh, consider both financial and non-financial information when you want to make a decision for your business. What kind of financial information do we have? For example, the revenue and cost are financial information. The effect on overall profitability is financial information. If you want to make a decision for your pricing, let's say you want to go for a specific price, it will absolutely affect your profitability. So this is a type of financial information. We also have some non-financial information, which is very important in decision making. For example, the effect on employee turnover. Sometimes, let's say, if you have some issues with having a proper office or proper instrument that the employees need, this can affect easily the employee turnover. The environment, this is also important because the work environment absolutely will affect the employees' performance and in general the total performance of the company. The overall company image is a non-financial information which can affect the every type of decision. So we need to consider both financial and non-financial information whenever it comes to making decisions. One point that you need to always remember: decision-making skills are as important in your personal life as they are to managers. So when you are going through this chapter, please uh, try to remind yourself that uh, where you can implement any of these processes in your personal life, because in any case you need to make some decisions in your personal life, and this is of course the importance of these processes in your life. So you need to have these decision making skills, which is important also for your personal life. Okay, as now you know the decision making process. We need to have a better idea about the relevant costs and benefits to make the decisions. So before we start with different types of differential analysis, we need to know the cost categories and how they are relevant to our decision making. Of course, we have different categories of costs, but there are always two categories of cost which uh, are irrelevant, or they are never relevant in our decisions. So they are never relevant in decisions. The first cost is sunk cost, and the second one is future cost. So in fact, when we have these two types of costs, there is no difference between the alternatives, means that we cannot include them in uh, decision making. Sunk cost is a cost that has already been incurred and cannot be avoided regardless of what a manager decided to do. So this is a type of cost that cannot be avoided. Uh, Therefore, it's completely irrelevant to your decision making process. But from the other side, we have opportunity costs, which need to be considered when we are making decisions. So we need to always remember that there are some opportunity costs, and we need to include them in our decision making process. An opportunity cost is the potential benefit that is given up when one alternative is selected over another. So, when do we have opportunity cost? Is in fact the time that we have different alternatives, and once we go for one specific alternative and rejecting or refusing to take the other alternative, in this case we are losing some profit which we could get from the second or third alternative. Therefore, when we are picking specific alternative, we always have some opportunity cost because of refusing any other alternative. And the key to successful decision making is to focus on relevant costs and benefits, as well as opportunity costs, while ignoring everything else. So when we are discussing a new uh, decision, and we want to make decision for different alternatives, we absolutely need to focus on relevant cost and benefits plus opportunity cost. So we need to also calculate the opportunity cost and consider the opportunity cost if we go for any specific uh, alternative. So, what is exactly differential analysis approach? In fact, decisions involve a choice among alternative actions. So, when we have differential analysis approach, in fact, we want to make a decision, make a choice among different alternatives. The process used to identify the financial data that change under alternative courses of action. Both costs and revenues may differ. Only revenues may differ. Only costs may be different. So it depends. We have different types of, in fact, differential analysis approaches, and it depends which item is going to be different in this analysis. Okay, so we have different types of differential analysis. The most common types of decisions which are involving differential analysis are it can be in case of accept or reject an order at a special price. It can be make or buy. The case of a sell or process further, and repair, retain, or replace equipment. We will have exercise for each of these items. So here you are with a very classic and simple exercise for special order. Before we start, you should understand the difference between special order and a normal ongoing business. So a special order is in fact a one-time order. So you may get this order only once and is not considered part of the company's normal ongoing business. Therefore, you may receive different orders as the normal business that you are having, but it can happen that once you have a very specific and different order for your product. So let's go through this exercise. ABC company produces 100,000 smoothie blenders per month, which is 80% of planned capacity. The variable manufacturing cost is $8 per unit, and the fixed manufacturing cost is $400,000, $4 per unit. The smoothie blenders are normally sold directly to retailers at $20 each. So this is the selling price, and ABC has an offer from XYZ company, which is a foreign wholesaler, to purchase an additional 2,000. So look at this. This is a different order. It's not the normal ongoing business that the company has. So additional 2,000 blenders at $11 per unit. Acceptance of the offer would not affect normal sales of the product, and the additional units can be manufactured without increasing plant capacity. So you don't need to increase this plant capacity. With the current you can produce. What does that mean? It means that with the current facilities and machinery that you have, you can produce this 20,000 additional blender. It will not cost you in terms of fixed cost anymore. So what should the management do? Using this information, we want to now solve the question. So the first thing that you should do in such cases, you have to calculate the revenue, the cost, and net income, which is our concern at the end for the decision, for two scenarios. One scenario is rejecting the order, and the second scenario is accepting the order. So if you reject the order is additional 2,000 blender at $11 per unit. If you reject the order, what will happen? In this case, the revenue is zero because you are not making any revenue. You reject the order. The cost is zero because you are not producing anything. Therefore, the net income will remain zero out of this option. For accepting the order, what will happen? If you accept the order, you will have revenue of 20,000. From where we got this? Let me help you with it. So, from where we got this 22,000? In fact, I will write it here. So, in fact, we have we are supposed to calculate the revenue in case we accept the order. What will happen if we accept the order? In fact, you will be able to sell 2,000 units with the price of 11. So, of course, you will make $22,000 revenue. And if you produce 2,000 units, it will cost you $8 per unit, which is 16,000, and you can see it here as negative effect. So what do we have here? In fact, why we only have $8 is because we only consider the variable cost and the fixed cost will not change. So in this case, I will have $16,000 additional variable cost. And the difference between 22,000 and 16,000 is 6,000, which is the net income I will make out of this order. So therefore, remember that the fixed cost will not change because the question told us this will not change, because if you back to the information here, fixed manufacturing cost is 400,000, but they can produce 100,000 per month, 80% of plant capacity, and accepting the offer would not affect normal sales, and the additional units can be manufactured without increasing the plant capacity. This is exactly the point that you should take care of it. If this is not going to happen, then of course it will affect your fixed cost. But in this question, in this case, if you accept the offer, it will not affect the plant capacity. So you can produce 2,000 additional without increasing plant capacity. Means that the fixed cost will not be affected and the fixed cost will not change. Therefore, what we consider here is only the variable cost and the expected revenue that is changing. What I calculated, it's the revenue 2000, 22,000, which came from 2,000 times by 11, and cost is 2,000 times by 8. Therefore, the difference, which is 6,000, is the net income. As long as the net income for accepting the order is 6,000, the decision will be accepting the order exactly. Okay. Let's have another exercise for special orders before we move on the next item that we have. In this question, XYZ company incurs costs of $28 per unit, $18 variable, and $10 fixed cost. So this $28 is $18 variable and $10 fixed cost to make a product that normally sells for $42. So what I have here, the variable cost is 18 and the selling price is $42. This is the selling price. A foreign wholesaler offers to buy 5,000 units at 25 each, and the special offer results in additional shipping costs of $1 per unit. So here you have one additional cost that you need to consider if you accept the order. Calculate the increase or decrease in net income the company realizes by accepting the special order, assuming they have excess operating capacity. Should the company accept the special order? So here Again, we have the same procedure. What we need to do is calculation of the revenue and the cost in case I accept or reject the order. So what I will have here, okay, I will have the same. Okay, so I have two scenarios. One is rejecting the order and the other one is accept the order. So in case of rejecting the order, how much will be revenue that I can make, how much will be the cost, and finally the net income. This is what I need to calculate. In case I reject, of course, there is no revenue, there is no cost, and therefore the net income is zero. But then I will have some revenue and some cost in case I calculate, I accept the order. What will be the revenue if I accept the order? If you look at here, you can sell it for 25 per each and you can produce 5,000. So I have 5,000 times by 25 each. This will give me $125,000. This is the revenue I can make out of accepting the project. But then I also need to calculate the cost if I accept the project. So first write down the revenue, the amount of the revenue, which is 125,000. Next is I need to calculate the cost, how much it will cost me if I produce 5,000. So let me explain this a bit more in details because you might get confused. First of all, again, we are not adding up the fixed cost, so the fixed cost will not be affected. Out of this $28 per unit, I have $18 for variable cost. So if I want to calculate the cost, I need to multiply this 18 by how many units? Exactly 5,000 units. But do you think that this is the total cost that I will have? Of course, no, because I will have additional $1 per unit for the shipping cost. So what I will do, I will add up this $1, okay? So times by 5,000 plus $1 times by 5,000. This will give me the additional cost that I have in case I produce 5,000 and accept the order. So this will be 95,000. I will write it here. Therefore, the difference between the revenue and the cost, which is 30,000, is the net income. If I am going to make $30,000 profit, why not accepting the project? Therefore, I will accept the project. So in this case, what was the point which is very important is, first of all, I'm going to consider the variable cost for each additional unit that I produce plus $1 additional cost for shipping that I have to consider. Okay, so the next item for decision making is a matter of making the product or buying the product decision. So what is the make or buy decision? In fact, a decision to carry out one of the activities in the value chain internally rather than to buy externally from a supplier is called a make or buy decision. Uh, in fact, in some industries, you don't want to produce every single component part that you need for the final product. Sometimes it's more profitable for you as a manager of the company to make the decision of buying the product from external supplier, and sometimes it might be the other way, making the product, all the components, parts of the product in your company internally. So let's have an example here. XYZ company incurs the following annual cost in producing 25,000 ignition switches for motor scooters, and these are the list of the different types of costs that they will have in case of producing the products. So there is direct material, direct labor, variable manufacturing overhead, fixed manufacturing, and the total, which is 225,000, where it will give you $9 per unit. So the total cost per unit is $9. Instead of making the switches, the company can purchase at a price of $8 per unit. What should they do? Now, the first impression that you may get here is if they buy it for $8 per unit, it will be $1 less from the total cost per unit, which is $9. But this is the first impression that you get based on the information, the raw information. This is why we need to calculate everything in details to make the right decision. So what I'm going to do here to come out with the right decision, of course, between the two scenarios of making or buying, uh, I need to calculate the cost for each scenario. Okay, so how should I do it? Of course, I need to consider the relevant costs for each scenario. So let's say if I have this scenario of making the product or buying the product, and in each case I need to consider the relevant costs. So I had direct material, direct labor, variable costs, fixed costs, and in case of going for buy, of course, I have some price that I should pay for it, and finally I can have the total cost. So in case of making the product, is very clear because all the costs is given. Therefore I have 50,000 direct material, 75,000 direct labor, 40,000 variable cost, 60,000 fixed overhead. I don't need to pay to buy any components, and the total cost by producing the product will be $225,000. I just added up all these components of cost. The next scenario is if I buy the component without producing it in my company. So I don't have any direct labor, I don't have any material and direct labor. I don't have any variable cost because the variable cost will be there if I produce any unit of product. And next is the fixed overhead. In fact, if I produce or not, I will have some fixed costs. So at least 50,000 of the out of 60,000 fixed cost must be observed under either option. So I will assume 50,000, and the price that I have to pay is 25,000 in case I buy it, times by $8 per unit, which is 200,000. So these are the costs that I will have in case of buying the product. The total will be 200 plus 50, which is 250,000. And from here I can see the difference is 250,000 in case of buy minus 225,000, which is 25,000 less in case I produce the product, which is giving me exactly different decision if I calculated in compared to the first impression that I got from the price 8 unit and the manufacturing cost per unit $9. So in this case I'm going to make the product myself, which is more profitable for the company. There is a type of cost that we discussed, opportunity cost, which is very important that we need to consider in all our decisions in terms of making or buying a product. The opportunity cost, as we discussed in the beginning, is a type of cost that we will have it in case of choosing between different scenarios, different alternatives that we have, and pick one alternative. Therefore, we will have some cost, or we will lose some profit, which is a type of costing in this case, if we refuse one specific alternative. So let's have a look at this example, how it works. Assume that through buying the switches, company, the first question, can use the released productive capacity to generate additional income of $38,000 from producing a different product. This lost income is an additional cost of continuing to make the switches in the make or buy decision. So based on the data previously, we realized that the cost, the total cost in case of making the product was 25,000 less in compared to buying the product. This was what we got. So for making the product, we got a total cost of 250,000, while for 225,000. 225,000. Okay, let me correct this. In terms of making, we had 225,000, while if I wanted to buy, it would cost me 250,000. Now, in this exercise, in this example, we assume that if they produce, then if they buy the product instead of producing it, then they will be able to generate additional income of 38,000. So what will happen if I want to again calculate the cost for make and buy? I have the total of 225,000 for making the product plus this 38,000 additional income that I will lose in case of making the product. So it's a type of cost which will happen in case of rejecting another alternative or option. So the total this time will be 263,000, while for buying the product is the 250,000. So the difference between these two, which is 13,000, is the cost, additional cost that I will have in case of making the product instead of buying the product. Therefore, it will change my decision again. This is why we need to consider the opportunity cost whenever we may have it. Okay, here we have another exercise for make or buy decision. ABC company must decide whether to make or buy some of its components for the appliances it produces. The cost of producing 166,000 electrical cord for its appliances are as follows. So they have direct material for 90,000, direct labor for 20,000, variable overhead for 32,000, and fixed overhead for 24,000. Now, instead of making the electrical cords, it's an average cost per unit of $1, which is 160,000 over 160,000. The company has an opportunity to buy the cords at 0.90 dollar or 90 cents per unit. If the company purchases the cords, all the variable costs and 1/4 of the fixed cost will be eliminated. So A, should ABC company make or buy the electrical cords? And B, what if the released productive capacity will generate additional income of 5,000? So first of all, we want to calculate the cost for make and buy the original data, and second part, what will happen if released productive capacity will generate additional income of 5,000, means that we will have some opportunity cost that we need to consider. So let's start with the first part, what we have. Again, as long as it's a make or buy decision, I will try to calculate the total cost for each scenario. So I have make and buy scenario, and for each I should calculate the total cost. So the direct material, direct labor, variable cost, fixed cost, and price in case of buying, and of course the total. So in case of buy, if I have to make the product, we had, based on the given information, direct material $90,000, 90,000 $10,000. Direct labor was 20,000, and the variable cost 32,000. I am starting with make scenario because it's easier, all the information is given. Then I will move on the buy scenario. So fixed cost is 24,000 and I don't need to pay to buy it, so this is 0. And finally the total is 90 plus 20 plus 32 plus 24, which is giving me 166,000 in total. Now, I want to calculate the total cost for buy scenario. So, if I just directly buy it, I don't have direct material, I don't have direct labor, and I don't have variable cost. But then I will have some other types of cost. In the question, it was written that, let me back. If the company purchases the course, means the buy scenario, all variable costs and 1/4 of the fixed cost will be eliminated. So we already said that there is no variable cost, 0. But only 1/4 of the fixed cost will be eliminated. What does this mean? It means that I have to calculate the fixed cost in this case for the buy scenario, which equals to the total fixed cost times by 3/4 or 0.75. So 75% will remain as long as 25% will be eliminated. So I will have 18,000 fixed cost. And next is the price that I have to pay. So how much I have to pay? In fact, I'm going to have 166,000 times by 0.9, which was the price given. So the total here is 167,400. Therefore, the total cost in case I buy the product will be 100. Sorry. I think this is not 160. Okay. So I will have here. Let me do it again. I will have 166,000 by times by 0.9 is 149,400. Okay, so now 18,000 plus 149,400 is 167,400. The difference between these two will help me to make the decision. So the difference is 1,400. The difference between these two numbers. Okay, so it means that if I buy it directly, I will have a cost of $1,400 more than the making products in my company. This is for the first part. So in the first part, we had $1,400 more in case of buying. Therefore, we decided to make the product. Now, the question is, the second part, the question is what if the released productive capacity will generate additional income of $5,000. This $5,000, this case will be opportunity cost that I should take care of that. So what will happen this time, I will prepare the uh, table for opportunity cost. So I have a total cost for each option and opportunity cost, then the total of these two. So in terms of make the product or buy the product, what will happen? The total cost for making was 166,000 and for buy was 167 and 400. But now I have an opportunity cost for making the product which is 5,000, and in case I buy it, I have no opportunity cost. Therefore, the total for making the product will be 171,000, while for buy will remain the same, 167,400. So at this time, I will decide to buy the product based on the new information, because the cost for the product, if I make it internally, will be more in compared to buying it directly from a supplier. So now that we had some exercises for different cases, special orders, make or buy, I want to get your attention about these three steps that will help you a lot to do not do any mistake when you want to make a decision in terms of make or buy decision. So the first step that you need to take is calculating the total amount that would be paid to the supplier if the buy option is chosen. So what we did here is the same. So you need to calculate the total price, how much you have to pay if you want to buy from the supplier. The second is calculation of the total differential manufacturing costs. How we do it? These are the variable manufacturing costs and traceable fixed manufacturing costs that will be incurred if the company chooses to make, but avoided if company chooses to buy. So we have different types of cost in terms of relevant cost for either buying or making the product. We need to calculate both in this case. So once we calculate all the costs for making the product, including even if there is any opportunity cost in case of avoiding buying or any variable cost or fixed cost which is relevant if we make the product. And finally, calculate the difference between the amounts from step 1 and step 2. If the amount from step 1 exceeds the amount from step 2, then choose the make option. If the amount from step 1 is less than the amount from step 2, then choose the buy option. This is exactly the process that we did for the previous exercises that just now we did it in terms of make or buy decision. The next item that we have for today is repair, retain, and replace the equipment. So there are some cases that the company doesn't know what is the best decision. Either they have to repair the equipment, retain it, or replace the equipment with a new equipment. So in those cases, we also need to calculate all the cost and benefit that we will get for each item. we have one exercise here to make it more clear. So, Jeff Code Company has a factory machine that originally cost $110,000. It has a balance in accumulated depreciation of $70,000. So the machine's book value is $40,000. It has a remaining useful life of 4 years, and the company is considering replacing this machine with a new machine. A new machine is available that costs $120,000. It is expected to have zero salvage value at the end of its 4 year useful life. If the new machine is acquired, variable manufacturing costs are expected to decrease from $160,000 to $125,000 annually, and the old unit could be sold for $5,000. Prepare the incremental or differential analysis for the 4 year period. So, with all information that we have here, now we want to make the decisions that company should retain or replace the machine. As just now we said, we need to calculate the cost for each scenario or each option that we have here. So again, I will prepare a table including the following costs: variable cost, the new machine cost, how much it will cost me if I buy a new machine, and sale of old machine. Okay, finally the total. So I have two options. One is retaining the old machine or replacing with a new machine. So in case of retain, we had a $640,000. From where I got this $640,000 variable cost, I will calculate it here for you. The variable cost is how much variable cost we have here? 160,000. 160,000 times by how many years? 4 years. 4 year, which equals to 640,000. So in case I retain the old machine, I will have $640,000 for the variable cost. Now, how much do I have if I sell the old machine? Zero. And as long as I don't need to pay anything for the new machine, I'm planning to use the old machine, so there is zero for the new machine cost. Now, I want to replace it. If I replace the old machine with a new machine, then the variable cost will change. Why? Because in the question is telling you that the variable manufacturing costs are expected to decrease from 160,000 to 125,000. So I need to recalculate the total variable cost for 4 year, which is 500,000. For replace, it will reduce to 500,000. But I need to pay for the new machine, of course, which will cost me 120,000. This is the price for the new machine. And the other thing is, if I sell the machine at the end of the 4 year, I will be getting, okay, sorry, this is cost. Okay, so I will have I will receive 5,000, so it's not a cost, in fact it will be income. I will show it by negative in this case because it's not a cost, it is profit in fact. Now if I calculate the total for each item for retain, the total will be 640,000 because this is the only thing I have, and for replace will be 500,000 plus 120 minus 5,000, which is 615,000. Therefore, the difference between these two will show me that there is 25,000 additional profit if I go for replacing the machine, and I will choose replacing the machine. Okay, this was the last exercise for today, and yeah, just try to go through all the materials that you have. I will upload them on Moodle, and later on we will have some more exercises and cases for this chapter. Enjoy and have a good day. Bye.